I am with Brian Moynihan. It's his first day on the job as the CEO of Bank of America. No doubt one of the biggest and possibly most demanding jobs in the nation. Brian, welcome. Thank you for joining us.
Eric, it's nice to be here. Thank you for having me.
So this is your first day on the job. Tell me, what was your #1 priority this morning?
Number one priority was to get down here to see you. But really, today I'm going to give a speech to a group here in Raleigh, North Carolina, about the economy, about the issues facing our industry, which it's part of my job is to make sure that our company is well positioned and our customers understand how much we care about them.
Give us a sense of what you're going to tell your fellow bankers. The hall upstairs is filling up with the best and brightest of the banking industry here in North Carolina, which is, as we all know, one of the most important states when it comes to banking in the nation.
Well, we're going to talk about the economy. This is the forum is a Chamber of Commerce forum and a banking forum. It's focused on the economy, and so I'm going to talk about what our experts tell us are going to happen in the economy, and I'm going to talk a little bit about the changes facing our industry. But mostly, I'm going to reestablish that Bank of America is out there to serve its customers well and do a great job for them, and to be part of the help of the solution for this economy and the crisis we've now passed through, and hopefully on the other side of.
Let's talk a bit more about Bank of America, and in particular you. The man you just succeeded, Ken Lewis, joked just a couple of weeks ago that you had a unique characteristic. You wanted this job. We obviously congratulate you for getting it. But at the same time, there are, let's call it, some lingering doubts as to whether or not you're the right man to be CEO of Bank of America. I want you to take a step outside of your body and perhaps fill my seat for a moment and tell us why Brian Moynihan is the right guy to run this company.
Well, first, our board had a very thorough process, as they should. This is a major company, has a major position for our shareholders, for our associates, and for our customers. And so they looked and did a thorough search, and I was the result of that search. And I think it reflects the depth and amount of work they did. They spent a lot of time thinking about it. What I bring to the company is tremendous energy, I think, a knowledge of the businesses, a team spirit to bring all the associates together. I believe our company is only as good as the person that carries our brand into an encounter with a customer every day, whether at a banking center, whether at an investment banker, and everywhere in between.
You just talked about some of your strengths. How else would you categorize your strengths? What do you think are, in addition to enthusiasm, obviously energy, what is it that people can count on from Brian Moynihan that they might not be able to get from, say, someone else?
Well, I think that what they can count on in our company is we can hit the ground running. I know the businesses, know the people, and getting lots of emails from our associates about congratulations on the job. It's just a reminder of how much knowledge we have of the businesses together. We can get off and get going right away. We don't have a period where we have to figure out what we're doing. We have a great business model. We have a great franchise, and now we just have to execute. And to have that message come from someone who knows the businesses, someone's been inside the company, somebody has a followership, and also somebody who realizes the power and strength of our team is a great message for our company.
Execution, or the need to execute, is something that you hear a lot from people in the business world, but a concept that I think is poorly understood. Tell us what it means to Brian Moynihan.
Well, what it means to Brian Moynihan is executing for the customers. And by doing that, you have to have talented associates. And doing that, you also have to balance the interest to make sure we make money for our shareholders. So it's basically making sure we understand what the products and services the customers want, from a mass market or an affluent individual customer to the most sophisticated institutions in the world, delivering those products and capabilities on a financially responsible and risk management basis. And that's execution. Getting up and doing it tomorrow, getting up and doing it the next day, getting up and doing it the next week, next month, next quarter, next year. That's execution. We don't have to buy anything. We don't have to find another product or service. We have what we need to drive this company for the benefit of our customers, our associates, our shareholders.
So you have the pieces of the puzzle, but does the need to execute also imply that you don't need to change your strategy?
We don't need to change our strategy from a sense of what businesses we're in and what customers we serve. What we need to make sure, we as an industry, the whole industry, is that we don't repeat some of the mistakes we made in the last 4 or 5 years, which are around of extending too much credit, trying to grow market share faster than we probably could as an industry and as a company, and those types of things. But those are around execution within a core business model that has been put together over tens of decades and is a very strong model.
People, when you say that you want to execute, I know that everybody wants to believe you, from your customers to your employees to your regulators to your investors, but execution, depending on what it is that you're focusing on, takes time. How do you build credibility in the interim before people have the ability to judge you based on your actions?
Well, when you talk about execution, what we mean is doing it for our customers, as I said. So if you think about last year, as we just closed the year, whether it's what we did in the consumer side, what we did in the mortgage side, or what we did in the investment banking side, we have great market shares, great positions. We already execute. The difference is, for the last 4 or 5 years, we've done a lot of acquisitions and done a lot of things to put this company together. That is behind us. And so is the economic crisis at its depths. And now we still have to work through a tough economy and potentially a slow recovery here. But if you think about it, that's all behind us. So we put together a franchise, and now it's about we can be released to just focus on doing a great job for our customers, continuing to do what we do best, and not have to focus on integrating acquisitions and things like that. We still have a little bit left to do on Merrill, a little bit left to do on Countrywide, but by and large, we're getting that mostly behind us.
There's no question the past is behind you, and I'm sure that you'd like to move forward as much as possible, but everybody wants to know a bit more about how you view those past 5 years that you just mentioned. If you had the opportunity to relive those past 5 years, what might you do differently?
Well, I think that as a company and as an industry, we probably would have been more conservative in the underwriting around the housing and around credit cards, the consumer side. As an industry, we overlent and customers overborrowed, and that led to a fairly significant bubble. On the capital market side, the innovation probably got ahead of the ability to risk manage the innovation, and so in the structured products and areas like that, we got ahead as an industry. And so I think if you could rewind the clock, you wouldn't do those things again. So as we look forward and recover, the most disciplined you have to be as a manager is in good times. It's easy to see the mistakes in bad times, and so what I hope our team will do is to remember what went wrong as we look forward and as we recover as a company, and as we start earning some money, we make sure that we remember those lessons as we go through the next better part of the cycle, heading into the next cycle.
Would you still have done all the deals that Ken Lewis did, for example, MBNA, Countrywide, Merrill Lynch, and if so, would you have done them at the same prices?
The prices and stuff, I think you'd have to, that's a question for Ken, not for me. But in terms of the operating strategy, these deals were good deals for our company and will benefit our shareholders and our customers from now to the rest of the time.
Now, speaking of Ken Lewis briefly, how do you see yourself differently as a CEO from the way Ken ran this company?
I think the difference between Ken and I worked for Ken for 6 years, and it was a terrific mentor and boss and learned a lot from him. I think the difference will be I'm younger in my term as CEO, and he had been one for 10 years. So the things that energize you as a young CEO are to go out and see people and engage with associates, to engage with the regulators and other political process that you have to. And I think that I'll do that with more energy than Ken did, just because his length of tenure, I think it was the type of things that he made his time allocations in different things. But he was a tremendous leader and a great leader for this company.
In addition to urging them to execute, obviously, how do you build morale among those people? Because Bank of America's had a tough 12 months. Obviously, things over the last little while have looked a bit better. The share price is up, but nevertheless, throughout the banking industry, and certainly at this bank too, morale isn't where it once was and where I'm sure you'd like it to be.
Well, it's better this year than it was last year at this time. You have to agree with that. Our industry suffered. You know, our associates and our teammates who work with everybody, whether they're the most sophisticated companies in the world or a general consumer, reflect a lot what their customers and clients are feeling. And so I think our morale is on the upswing just because of that. I think our morale is on the upswing because the TARP was paid back. It was one of the biggest events from a morale boost in this company's history. So I think the morale is on the upswing. The CEO question was one that was hanging over the associates' heads, and that's behind them now. So I think the pieces are in place, the management team's in place, and we can now move forward.
Speaking of morale, Bank of America means a whole lot to Charlotte. We're not in Charlotte today, we're in Raleigh, but I don't need to tell you that. How committed are you to the city of Charlotte?
The headquarters of this company is in Charlotte.
And you expect it to stay there?
Yes.
How about yourself? Will you be moving there? Will you move your family there?
I was on my way here today, but I stopped to see you here.
Okay, so you'll be living in Charlotte. How about you've got some kids, you obviously have a wife back in Boston. Where do you expect them to be?
We're working through all that. My current issue is making sure I can do the most I can for the company beginning today.
Let's talk about some of the challenges that confront you as a CEO. Again, the industry has gone through a tremendous period of turmoil, and there are other CEOs who face big challenges, but it's just you and me talking today. So let's talk about one of them, the possibility that Congress is going to reintroduce something akin to the Glass-Steagall legislation. What would that mean to Bank of America, and how are you dealing with that possibility?
I think what the real question is what it would mean to our customers. And if you ask our customers, our ability to bring every kind of capital raising to the table, whether it's from maybe not the smallest businesses, but for mid-sized business up, IPOs, leveraged finance into the high-yield markets, those are all critical elements for us. And they need to be brought on a holistic basis, whether it's a bank line, whether it's a high-yield bond offering or an equity offering for some of those clients. I think that integration is what the customers want. So I think as people study the effects of the crisis as what really went wrong, the causes of it weren't the fact that a company might own both a securities firm and a banking firm. The causes were, the excesses were at both types of firms. And I think as you sort that out, we believe that the idea of repealing Glass-Steagall is not in the best interest of our customers.
What can you do to persuade Congress of that argument?
Well, I think we can let them hear from our customers, the same thing that our customers tell us, which is they want us to provide these services on an integrated basis, corporate banking, commercial banking, and investment banking. They see the power when it comes together. And I think our customers are better to convince them than us because they're the people who benefit by the services.
Let's talk for a moment about one of the things that Glass-Steagall allowed commercial banks to do, which is to enter the business in a concerted way of investment banking, in particular proprietary trading. How do you feel about risk? How do you manage the pressures that companies like Bank of America face when it comes to taking risk today?
Well, as a financial service firm, we take risk. We have a $2.3 trillion, $2.4 trillion balance sheet out there every day that has risk in it, embedded in all parts of it. The question is, how do you manage it, and how do you take all things in moderation? And I think that's the adage we got to make sure that we live by. So Tom Moynihan and his team are experts in understanding risk. The risk management team that we've developed and learned our lessons from and added more talent will be better at managing that risk. But it's really a joint partnership of understanding the positions, what we're doing, why we're doing it, and are they important enough to make a difference in how a firm performs, and more importantly, are they important to our customers and clients? And if that's all there, then I think you can manage the risk. If you get into things which don't have those elements, then I think you start to run into problems.
Do you feel as though you have more of an appetite for risk than Bank of America did under its previous leadership?
I'm not sure that that's a comparison that makes sense. I mean, I was in the company for 5 or 6 years. I think we have an appropriate appetite for risk. I think our risk appetite in certain areas got out in front of us, but it was more generally one of the areas that was most disappointing to us was the consumer lending side, and Ken's been clear of that, and we've gone to rework that. So I think the risk we take as a company is the appetite is not changing dramatically. I think the industry's appetite and our appetite as a company changes, but it's less about mine versus a predecessor or anything like that. It's more about you learn your lessons, and you have to learn from them.
Most of the exposure that your company has on a balance sheet basis is to the U.S. economy, notwithstanding the international assets that you acquired through Merrill Lynch. Will you reorient the exposure that this company has to take advantage of growth opportunities in international markets?
We do that today, and we've been doing that. Remember, Merrill Lynch is now over a year old, and we've been increasing our capabilities internationally. Tom Moynihan and his team in the investment and capital markets area continue to hire people. We moved talent executives from the U.S. to some of the international markets to help make sure that we are moving with the pace we want to. We'll be more important in international markets, but again, everything on a risk-managed basis, where the places where it's important to be and the kinds of clients it's important to be with are things that are very important to us as a company. So we'll be growing our international franchise.
Do you think you change your approach to international expansion in the sense that you might expand your retail franchise and some of your commercial banking franchise internationally to complement what you get from global markets under Tom Moynihan?
The businesses we believe, and I believe, are international businesses are the wealth management business, the capital markets business, and investment banking business. I don't see, we have a credit card business that's not, one of the larger ones in Europe. I don't see us expanding our middle market commercial banking or retail banking around the world.
How do you deal with the pressure that you're getting from Congress and from the White House when it comes to the wish, let's say, that banks would lend more to enable people to invest in either consumer products or to invest in their businesses, while at the same time facing pressure from regulators to keep your capital levels up? How do you reconcile those two kinds of pressures?
Well, I think you have to reconcile them because, remember, what's good for the economy in the world, and importantly in the U.S., as you just stated, is good for Bank of America. So we have to help lead the economic recovery. And at the same time, we have to be prudent lenders. We recently committed to doing another $5 billion over what we would have done otherwise in lower middle market and small business loans in 2010. The reason why we committed that is as the economy stabilized, it will be easier for us to take a little more risk. When the economy hit the skids, when firms' revenues are dropping dramatically, when they were blowing covenants, you had to pull back. And on the consumer side, when unemployment rose from 5% to 10%, you had to pull back. That's now stable and moving, and our expectation is we'll help lead that stability from a lending perspective. But it's something you have to keep in balance. We will do everything we can to help the economy, but at the same time, we have to be prudent.
How do you feel about where we are in the credit cycle? Have we troughed yet? And are we going to see things like charge-offs and non-performing assets begin to come down?
Well, we're seeing it sort of it worked through the system, and it works through from areas that got hit first, start to move better first, like the credit card business, where you've seen just in some of our public reports, you can see our charge-offs and stuff are starting to stabilize. Still very high. This is not perfect world, but still very high. But you're seeing stabilization. You're seeing that in the consumer first, just because it got so bad so quickly, and then has stabilized the level. And the team's done a great job to get ahead of it and work on it. In the commercial areas, because it lags the economy, we'll see that continue to be difficult for the next several quarters. But at the end of the day, I think the worst is behind us in a sense of credit. Just because the consumer side was so violent and so big. $250 billion credit portfolio drove such losses that the portfolio is only $200 billion now, and they stabilized. I think a lot of it's behind us.
Brian, as you just described, you've got a whole lot ahead of you, lots of hard work to do. How do you expect to have fun on this job? Tell us what do you expect to be the most fulfilling, exciting part of this gig?
Well, there's the people. If you saw the people that I get to interact with every day, saw their absolute determination to put our company back to its status of being the best in the business here, despite the last few years. That's what is fun, and they're fun people. They enjoy themselves. They work very hard. They like to laugh. They like to enjoy themselves on the side. So I think that's really it. This is people. That's number one. Number two is you can see what you can really do. For customers and for the associates and for our shareholders. And you can see the power that you have of making decisions and getting a team to work together to drive it. I've seen that in the past jobs I've had here. They're all big jobs in our company. This is obviously a bigger one than I had before, but you can just see that power of what you can do. And so when we can commit $5 billion to help the economy drive, that's a powerful thing. And we know we can deliver it because David Darnell and his team know they can deliver it. And that's the important thing.
Well, Brian, we'd like to thank you very much for joining us right here. Your first day on the job as CEO of Bank of America. We wish you well.
Thank you very much.